Hi, hello everyone. Sorry for the delay. I've been delayed for almost an hour. My last call was very interesting, very good, and it's for my own financial education and other stuff. So again, so let's get into the Discord, this hangout, and this call will talk about how to set your goal about on your financial game plan. Present to everyone. I'm good. Yeah, let me move this stuff around a little bit. Give me a second, because there's so many things going on today. There's still something that I need to work on, but it's okay. I will just keep work on it until we are good. Okay, there you go. All right, financial game plan. Let's start it. So the first thing, of course, is again, just like last call, to start with a disclaimer, because I am not an attorney, CPA, or financial advisor. So I'm not giving any financial advice or anything to you. And it's a share of information from me to you. Excuse me, I'm thirsty. So what I'm going to talk about is about a financial game plan again, and how to set your goals, and first talk about the word financial game plan, because in the last hangout I just briefly talk about it as the title of the hangout, but I didn't really talk about it in depth. So it's a financial game plan. It is really a game plan. I want you to think about it this way, because when you talk about life in general, I won't get too much into it because it's really not the focus on this hangout. It's more on the timely wealth on the other side, but I'll just briefly describe it. So for your finance, it is a game plan, and it is a major piece of a much bigger game plan, which is the wealth game plan, which is again is on the timely wealth side. And the grand mission of any game plan that I talk about on the wealth game plan or on this financial game plan is a very simple statement: is how to create asset to generate value. So let me say again, it's create assets to generate value. What do you mean by that? Let me explain it a little bit, which is when you try to get value out of something, when you try to get something, you can't really get it directly. For example, today, if I want to, I just come up with something weird. If you want to have an egg for breakfast, okay, how are you able to get an egg? You have to get money to buy an egg, or if you are a farmer, your chicken you have to raise the chicken, feed the chicken, so that the chicken will produce the egg for you, so that you can have it and cook it and to have an egg. So in these two examples, the money that you make, you need to make money, right? You need to make money to get the money, and then use the money to buy an egg and to eat it. Or the chicken, which you raise it, you have to feed it, is the asset. You create or acquire that asset and then from that asset, you in turn get a value of it. You get an egg that you can eat. Okay, it's the same. This is the is a core principles that I talk on the timely wealth side. Is you cannot really get any value out of thin air. You have to create or achieve or acquire some form of asset in order to create that. And for the wealth game plan, and in this call, talk about financial game plan, is how to create the asset that you need which in turn generate the value that you want. So what do you mean by values in the financial scope? It is when you talk about investment, a lot of people think about cash flow or think about appreciation. Okay, you buy a house, it appraises in value, so you make a lot of money. But what does it really mean? Does it really do you anything? The money, what I mean is when you make that money, you create more asset. But what you really want is what the asset gives you, what the money can buy for you. Because if you just have a whole bunch of money, it doesn't do you any good if it's just sitting in a bank and doing nothing, right? You won't able to buy if your money sit in a bank and then suddenly the currency go all the way down, devaluate, and it's worth nothing. It doesn't provide you any value. Of course, I'm get a little bit off track here. So let's get back to it, because I tend to get excited when I talk about these kind of topics. Excuse me. So again, the key on the financial side is creating the asset, making the money, which generate the value. The value, what you should really think of is the cash flow or the money that actually generated from the money of the asset that you have. Let me say again, because it might be confusing to you. What I'm saying is you can create some form of asset. That asset can be anything. Can be your money, can be your knowledge, can be your relationship. I'll talk about that. There's different type of capitals in the future, but it is some form of asset that can generate the value that you get. And in the financial world, in the financial game plan, the value is, well, money. But it is not just the asset, money's money, but it's the cash flow, what the money generates money for you, or the asset, or your knowledge, your job, and so on. So that is the real main purpose for the financial game plans is about. And I keep talking to the financial game plan. So let's talk about it in that sense. As a game plan, there are several components that you need to think about. One is I should start drawing. I will keep talking. It's a hangout. You can see this. You can see my screen, sir. And so I should really utilize it. This is a new program that I have. I would see. So I would try it out. So when you're playing a game, there are several things that you would need to know. One is, what is the definition of win? How do you win the game? And you can win the game in a financial sense is not just making a lot of money, but making the enough cash flow or enough value to you so that you can use those to get what you need. So what do you need? For example, your living expense. Sorry, I'm using my mouse here. This next time I would let me try it out. Your expense, and could be more asset. What I mean by is to increase your living quality, or lifestyle. Okay. Oh. So in the in the Excel spreadsheet I'm going to show you later on is talk about these two. Is the expense which means if you're able to get your passive income and portfolio income surpass or more than the expense you need to pay right now, you achieve financial freedom. That's one of the goal of the definition of win for the financial game plan. Another one is, what do you really want to, what kind of life you want to live? You can think about it as the dream book, or there's a lot of different ways to describe this, and I don't need to go into the detail of it right now. So, but it's the lifestyle. What's the lifestyle you want to live? And in order to live that lifestyle, how much money you need to make to achieve that? So besides the definition of win, how about we should also talk about how do you lose the game? Oh, sorry. Can't spell. Said it wrong. How do you lose the game? What's the definition of lose? And that could be many things. Right? It depends on who you are. What's your definition of lose? It might be bankrupt, right? You don't have any money. Bankrupt. Or I would add in, say, how about live below really should make it smaller. Your mean. Live below your mean, because when you talk about financial education, a lot of people will think of, okay, you should save money, okay, reduce your expense. It might be good, you know, back in the old days, but is that really the way you want to live your life? You know, this is one of the things I learned directly from Robert Kiyosaki. You know, don't live below your mean, because if you do that, it just create more stress, or you're not happy. You only have one life. You know, why would you live below your mean? And in order to quote have a better future in the future, you should really. But again, of course, I'm not saying that you should, you know, just go expense, you know, live the lifestyle you want to live before you have the mean, or live out, or basically saying live above or live beyond your mean, right? That's not a good thing either. What we want to do is have the game plan to help you to raise your mean and live in it without living below your mean or living above your mean. Okay, that's another way to lose. One more other, how about you retire broke? Oh, how about you retire broke? Because according to studies, I believe there will be 54% of the people, or more than that, I can't remember the exact number, that will retire broke by the current situation, because of the 401k, because of the money that they save. So when they actually retire, they will retire broke. Again, I'm not trying to banish what's the if you have a financial advisor, what they say. Well, having a retirement account is good. Saving money is quote good. I will get into that in the future. But think about it: if you retire, if you have your retirement fund just for the purpose of saving some money, so that in the future you don't have to pay as much tax, you may be missing the point, because by that statement, it means by definition, really, is when you retire, you will make less than what you are making today. So if you make less, what does that mean? It means this. Oh, live below your mean. When you retire, do you want to retire and you will make less money and living a less quality lifestyle? Maybe you will, okay, that's fine with you. But if I have a choice, I wouldn't want to do that, right? So that's the yeah. So that's what the definition of win and definition of lose. I'm trying this and really like this application. So besides the definition of win and lose, what's the game rule? Okay, the game rule. How do you what should you do? It's very simple. What I can think of, you can have your own rule if you want, but my rule is, and I can show it over here, is simply what you do is ethical, legal, and moral. So you're not trying to steal other people's money. You're not trying to do anything bad. You're not trying to do anything illegal. What you would need to do is, as I said at the beginning, to create the asset that generate the money. And I covered that in the last hangout. What are the options that you have? You can go back to watch that videos if you want to take a review. And of course, if you have any suggestion, anything you want to point out, anything, just add in the comments. So about the game itself. So that's basically what I have what's the definition of what the game is, of the financial game. Okay, before we get into the planning. So and also, before I show you the Excel spreadsheet that I have, I also want to talk a little bit about game strategies. Because when you play a game, you have strategies, right? You have techniques, which is the game rules. The game rules, you have the techniques. The techniques is how to acquire the asset, how to make money, and all those things. And then also about strategy. Let me talk about strategy first, because a lot of people, when you talk about investments or in anything, let me take it back. When you talk about strategy, a lot of people talk about diversification when you talk about investments, right? And it is good. I don't against it. I'm doing it myself. I diversified my portfolio. What's more really important is the balance of your portfolio, but that's another topic for a different hangout. But for the diversification, excuse me, there are two things that I want to point out. One is, are you really diversifying? For example, a lot of people invest in the stock market, and they think diversify is buying index funds, buying index. Buying index, buying ETFs, buying mutual funds, and so on. Is diversification, right? The mutual funds invest in is composed of hundreds of thousands of stocks, while the same for the index and so on. But if you think about that as true diversification, think about what happened in 2000 and year 2008, the market crash, right? When the market crash, does it really matter? Are you really diversifying? Does the diversification strategy that you are employing working for you? Do you really diversifying? So what I want to point out is in the last, let me see if I can bring it up actually. Give me a second. In the last hangout, I talk about different asset types, right? And give me a second. And there are four different asset types. Do you remember what they are? Paper, business. Okay, let me bring it up. Real estate and fine. Give me a second. Okay, there you go. Let me show it to you. Oh, no. Let's see if you're able to see it well. Let me zoom in a little bit. Okay, yeah, that's better, right? The paper asset, business, commodity, and real estate. Of course, for example, in 2008, oh, I minimize it, sorry. In 2008, the paper asset, the stock market on the public trading one, right? Not the private one. The private might be still going good, going bad. That's out of the scope of this conversation. But the stock market and the real estate goes down. Well, does the commodity goes down that much? No, not necessarily. You can take a look at the gold and silver rate, and also but are you really diversifying when you are doing real estate back then? Okay, are you over leveraging? Are you buying single family homes? Or you're looking at commercials? Are they income producing? If you're just buying residentials, okay, over here. If you're just buying residentials and you bet on appreciation, because back then the market was really good, right? Before 2008, the real estate market go up like crazy. And when that happens, what happened? When the crisis hit, it goes down. But if you were not betting on the appreciation, if you are holding rentals, does it go down that much, or do you lose that much of money? On paper, yes, you did, because the value goes down. But does it still giving you the cash flow that you need? Right. So that's what I want you to think about when you think about diversification, right? So the second thing about diversification, let me think if I remember what I tried to say, is to I forgot who said it. Maybe it's Robert Kiyosaki, maybe it's Warren Buffett. I forgot. Is that when you diversify, I should do it like this. Give me a second. Yeah. So when you diversified, oh, sorry, press the wrong button. Give me a second. When you sorry about that. When you invest, what you really should do depends on your situation. Is when you should focus in order to make money, but you diversified in order to keep money. So it's a two different strategy, right? When you invest in something, if you want to grow your asset, you need to focus. While if you want to be on the safe side, you might make less, but that's okay because you want to keep it. Right? So there are two different aspects. But diversification, again, would you want to diversify in just one asset class or over multiple asset classes? 2 is, should you diversify? What's your current position? Should you focus in a few assets and find a good one to grow it, or you diversified to keep it? What's your position again? And one more thing is, of course, what are the assets that you invest in? Okay, and you are invest in for the cash flow, for the end game, quote unquote, in terms of talking about it in terms of a game, or you want to build your portfolio, you want to increase your assets, make it bigger, make more assets. If that is the case, maybe doing looking for cash flow the asset that will generate cash flow might not be the best thing for you at that moment, or at this moment. So let's talk about the spreadsheets, because I said there will be a spreadsheet available. So here it is, and here's a financial game plan that I have. And if you want, you can email me, so I would send a copy to you, free of charge, of course. It's really something that I would like to share for you, so that you can take a look at your current financial situation. So here's the financial game plan. Let me see if you can see my mouse. I don't know if you can see my mouse. So if not, then I just use the cursor to describe what you are looking at. So there are some basic stuff, your name. I'll go over these two later. The Excel spreadsheet cells that in orange is the one that you can fill in. So what it does is, we talk about I briefly talk about, when I talk about the definition of win, there are two criteria, or two definitions of win. One is financial freedom. What's defined by financial freedom? It is your, maybe I should add it over here to show that it is your passive and portfolio income greater than your total expense. What that means is, besides the number, besides the equation, is that you can basically stop working and you can still live on without any problem, because the money is paying all your bills. Okay, so give me a second. I really, on this one, I really should show you something else. So let me go back over here. So about that financial freedom, I want to make it really back. That's okay. When you talk about financial freedom, you need to talk about two things. One is your income statement, and one is your balance sheet. Okay, so the game is create assets or acquire assets over here, which generate the income that you need, that pay the expense that goes out. So what's generate your income? It could be your job, job, and most of us only have the job, and that's where we rely our income in, or from the asset, right? So if I am able to have my passive income, meaning the money generated from my assets here, to be more than the expense that I have that's going out, then I don't have to have a job and I can still live my life. Of course, over here, you have liabilities. You have a car loan or a home mortgage or student loans or any other debt that would contribute, become part of the expense in the form of monthly payment that you need to pay. But the difference between the two, which is your net worth. And if you're able to increase your asset and keep the same or reduce your liabilities or increase it, doesn't matter, as long as your net worth increase, meaning potentially the difference between this and these two will be bigger, right? Because if the bigger your net worth is, meaning there are more assets that you have, potentially meaning there's more cash flow that you can get. And if you have smaller net worth, smaller liabilities, meaning you have more net worth, then this difference will be bigger. And when that difference is big enough to pay your living expense, right, your gas, your food, your clothing, and all other stuff, your vacation, whatnot, then you would able to achieve financial freedom. So go back to, sorry, that this call might be a little bit long. I don't know how when they started. I think it's about 20 minutes already, but I will keep going to at least to give you a view of what this spreadsheet looks like, and we can continue on the next hangout. Oh, sorry. There you go. Okay, so on the financial game plan, that's the definition of financial freedom. Again, is your your passive and portfolio income greater than your living, or not just living, all your expenses. Okay, so for example, over here, later on I can change the color of this because it might not looks very nice when I when you actually work on it. But I just marked it as the input color, the quote unquote the standard input color, so that you will see what fields are edible. So for example, let's put something here. Say I have transport, I need to pay gas, I need to have a car loan, whatnot. That's cost me $500, for example. So you can see that the cash flow will be negative 500, and the passive income that I need is 500. It's very simple. And tax and utility, just let me put it in random. Education, so maybe I budget. It could be a budget too. It doesn't need to be exact, or you can skip it. For example, using this, I can skip it. I don't really have any entertainment. I'm a boring guy. Sorry about that. And then I eat a lot of food. I love food. So for example, well, that's too much. So for example, something like this. So list this out of what you say. I really just put a random number. $2,000. I don't have any pets, and I don't do any shopping, which is good. I have to pay tax, and how much tax I'm paying, I don't know. Just for example, $3,000. I don't care. So, and travel 200. Well, 300 probably maybe too much. Let's just make it a little bit less. Okay. So you can see that my monthly, in this example, the monthly cash flow right now is negative. Of course, you can put in your job over here. Okay, your job, how much is paying you every month. Okay, just a hypothetical number is $6,000, for example. Okay, so your monthly cash flow is positive now, so meaning you are at least able to pay what you need to do. Oh, this is too low, so let's make it a little bit more realistic. So I have a monthly cash flow of 250, which is still okay. I better survive, but I couldn't save any money, right? And my passive income is actually this sum of the all the expenses. You can scroll down over here. You can see that that's the total expense, and it's very simple. Your passive income need to match that. So what kind of passive income I have? For example, I don't like the way I put it here, so let me just fill it in. So my name, Homer, and oh, that's a glitch. I will fix it later on. Why I do that? Doesn't matter. This should show Homer over here. Anyway, so for example, I have some saving account. Have a saving account. I have $10,000 in it, for example. Okay. Then as I'm doing private lending, maybe I have some deals, and for example, just without giving out too much information, loan number one, I have in 50,000 in it. Okay, and in there, because this is an asset, remember it is a loan, not I borrowing money, I'm lending money out, and it is give me some return. Okay, so over here I'll put in payments from loan number one, and just a brief number, say for example, just keep it simple, just 10%, $500. Okay, and since over here there's a utilization, you can see that what it means that since I'm utilizing this debt, I already use it, so I put a yes on it. I'll get back to what does it mean later. So for example, I have a home, I have a house. Okay, primary residence, sorry, residence, and it worth today, for example, because it's just a fake number. Then I have a mortgage of 400, for example. So you can see after I type this in, over here I have the net worth of that much, 260, and there's a net worth utilization and the debt to asset ratio. So this number, let me first talk about what this means, all this number means. So here I talk about this is the target passive income. That's how much you need to generate on your passive and portfolio income columns in order to achieve financial freedom. And then this is your financial freedom progress, how far you are going, so when you reach 100%, you reach your financial freedom. And your debt here is your net worth utilization is saying for the net worth that you have, how much of them are in play right now? So how much of them is generating money for you? You are making passive money for you. So what does it really mean? What it means is on the savings, say, let's make it a little bit bigger, make it a little bit more realistic. Say I have $30,000. and I can actually make it into a loan that I lend out, and I generating income from it. So this becomes 0. So if that's the case, you can see that my net worth utilization goes up. Of course, I will put an entry here and say how much I'm making. But just for the sake of this, this number shows you how much money that you have, how much net worth that you have. You're actually using it to generate the cash flow. Okay, of course, this will change. As you're making money next month, you have $500 go in here. Then the next month, this will become $500, and so on and so forth. And you can update it every month. You can update it every 3 months, quarterly, half a year. Doesn't really matter. It's up to you. Right. So the key is this is a tool for you to see what's your progress. So let's put it back here. So take this away. So this right now is showing 18%, meaning of my net worth, how much of them are being used in, or maybe 250. Yeah, the number is not right. I will update it. Sorry about that. It should be more than that. I think it seems like this number doesn't factor in the mortgage. It was just taking this total and do the net worth utilization, which is not correct. Why is not correct? But anyway, I'll fix that one. And then the debt to asset ratio is basically saying how much debt versus how much asset do you have. If you have a high debt to asset ratio, meaning you are leveraging quite a lot. So is it a good thing? Is it a bad thing? I don't know. What I know is if you don't have the good financial education, when you have a high debt to asset ratio, it might be dangerous. Let me sidetrack it a little bit because I really want to show you this. I really want to show you this. Where's my mouse? Here. Very quickly. Screen one. There you go. This one. So this is the US debt clock. Okay. And in this clock, this is a clock that's showing how much debt or what's the all the information about the US government. Now, over here, I don't know if you can see it. So you cannot see my mouse. You cannot see my mouse. Yeah, I need to work on it next time. You can see on the middle, in the middle. Oh yeah, I know. Give me a second. Let me put it over here. Let me share it so you can see my mouse, because I really want you to see this. Okay. So there you go. So now you can see my mouse. Make it a little bigger. Okay. So you can see it over here. Let me look for it. U.S. national debt. Okay. U.S. debt is $18 trillion. How much asset do the government has? Is here. Is the U.S. GDP. Can you see that here? Here is $17.8 trillion. So the financial statement of U.S. government is actually 17.8. Move it around. So just draw the lower part. Is it has $17.8 trillion in GDP, but it has $18.3 trillion in debt. So you can see that it is over 100%. Okay, and not to say that there is off-the-book debt that we need to occur that it has, which is over here. You can see over here, the U.S. unfunded liabilities, $97 trillion. Of course, they have the other asset over here, but that is not really what the government has. Is what we has as a nation over here in the corporate asset, the household asset, and small business asset. Those not owned by the government, right? But these are the liabilities, unfunded liability or off the book liabilities that the government, U.S. government has. So you can see that this is $97 trillion over here waiting to come in. I won't get into detail of that because it's another hour section. But just think about how bad it is for the U.S. Government in terms of its financial statement, its income and expense. You can look. You can go here, take a look at yourself. It's usdebtclock.org. So this is just something I really want to share with you, so you can have a sense of what that means. So let's go back to the financial game plan over here. So that's what the debt to asset ratio is. So the one more thing about the net worth utilization is that when you go over here, this is the overview page. You can see that I am making my earned income is $6,000, passive $500, and cash flow $750, and so on with that net worth and that net worth utilization. So these two fields over here is the potential. It's an estimate. Let me read it out. This is an estimation on how much of your net worth would be able to put into motion, making money for you. So while here I have 18%, what this means is, what if 60% of your remaining net worth, so it doesn't count this one because it's already put in motion, it's already making money out for you. What if the other assets that you have that's not you are not utilizing, and 60%, you can change this number. Sorry, my computer somehow is pretty slow today. 60% of it, you're able to utilize it to generate money for you, and your estimated its return would be 4%. Again, you can change it. Then potentially you could make that much income versus what you currently have. 5. I think that's right. And your potential progress is that much. Okay, instead of currently 9%. So this gives you a sense of what do you need to do? Do you need to acquire more assets, or you have some good assets that you can start making more cash flow? It's both ways, right? You need to do both. So over here, again, I didn't talk about it. You can enter your date. So to date is 12 today, or 5, and then you can add some checkpoints over here. You can say 6 months later. Yeah, I'm going to do this 6 months later. So it will be first 12/05, or just make it first 16. right? And then I check it every half year, right? So then the next one will be 17 and be 717. And you can click on the link, and this would supposedly send you to the page. And you can see that underneath there is for the F1, F2, F3, F4, which is corresponding to the to these 4 checkpoints. Okay, and its name is checkpoints. So you can use that to keep track of progress. So you can keep a starting one, put down what you are, where you are today, if your financials, what's your expense, what's your income, and then you can put in, okay, 6 months later, my expense would be that much. It might change, or my job income and my portfolio and passive income will change. And so you can see, you can do a comparison and see your progress. Okay, so that's the financial freedom part. So the next part of this spreadsheet is the lifestyle freedom. What I mean by lifestyle freedom is the life, is your dream life, right? What kind of life that you want to live? So the mechanics is exactly the same, but just that instead of saying what are the expenses that you currently have, is your desired lifestyle monthly expense. How much money that you want to budget, or you think you need, if you want to live the life you want. For example, instead of no shopping, I maybe like to budget, I don't know, $2,000 every month for just buying all the gadgets, all the fun stuff that I wanted to buy. If money is not a concern, and I might travel around the world because I already proved achieved my financial freedom. I don't have to work, quote unquote. Of course, I could because I love what I do. Just for the record, but I can travel. I can budget some money, say $200,000, or well, each month that might be a little bit much, but what the heck. So put this down, and then this is what you want to achieve after you achieve your financial freedom. And then after that, you can again do the same thing, set up different checkpoints and see your progress. Okay, so basically that's it. I heavily over time today, but I know because there's a lot of stuff over here I want to cover, and I really want to cover them. So let me know what you think, and if you want to get a copy of this spreadsheet after I fix up some of those issues, I would be happy to send it out to you so you can try it out yourself. All right, and that's about it for today, and I'm checking out right now. Thanks for watching.